Hello and welcome to The Trade. Before we get into the charts that matter, a quick look at what traders are watching. And a 5-session rally on global equity markets ended after the Federal Reserve kept rates on hold as widely expected, citing elevated inflation and solid economic growth while giving a little indication of when interest rates may be cut again. Stocks on Wall Street little changed when the decision was revealed, with investors more focused on earnings results from the mega cap tech stocks. The S&P 500 closing just slightly lower, but it did cross above 7,000 points for the first time, and that was ahead of earnings from Microsoft, Meta and Tesla. Now, Microsoft delivered a marginal beat on quarterly revenue for its crucial cloud computing business, highlighting growing competition in the industry. Revenue at its Azure Cloud division growing 39% in the period. Meta forecast its capital expenditure to increase sharply as the social media giant builds AI infrastructure, with the Facebook and Instagram parent expecting annual capex of between $115 billion and $135 billion. Shares of the company surging by 10% in extended trade. And Tesla beating Wall Street estimates for fourth quarter revenue, despite the EV maker delivering fewer than expected vehicles in the holiday quarter, reporting revenue of $24.9 billion for the 3 months to the end of December. Tesla also said it had entered into an agreement to invest about $2 billion into Musk's AI startup. And SK Hynix, a key NVIDIA supplier, reported a record quarterly profit in Korea. ASML, the Dutch chipmaker, booked its highest ever fourth quarter orders, but shares did fall as it announced job cuts. And Seagate Technology shares surging to a record, the hard drive maker recasting third quarter revenue above Wall Street estimates, while Texas Instrument shares were higher after the chipmaker forecast first quarter revenue and profit above estimates. And shares of gold miners, similar to what we're seeing here in Australia, tracking that rise in bullion prices, gold now above $5,500 an ounce. Let's get into the technicals with Zoran Kresovic from Blueberry Markets, who joins me now. And Zoran, are equities here poised for a bit of a sell-off following that stronger than expected CPI print?
Well, it definitely appears to be the case, Julia. Thanks for having me on the show once again. We are seeing a broad sell-off in ASX 200. I'm just having a look now. As the day goes on, it's actually looking worse and worse. So right now we're sitting around 0.68% down, or 60 points, and 9 out of 11 sectors are actually looking fairly bearish. So there's a broad sell-off in the market by CPI front that came through yesterday, obviously indicating that inflation is still stronger than what market was expecting and anticipating. And on the back of that, we could be expecting, or market is pricing around 75% chance that we'll get that 25 basis point interest rate hike come through in RBA's meeting in early February. Now, if looking at the ASX, like obviously we're seeing quite a bit of a sell-off on the back of that. Now, whether it's a structural or whether it's emotional move, it's hard to tell right now, but I do expect the ASX to actually drop off a little bit more and consolidate before it actually starts to potentially head higher.
All right, that's the ASX. Let's get into the Japanese yen then, and particularly in terms of what we're seeing here, the Aussie bouncing off that 20-day moving average here.
Yeah, I've purposely taken this chart in particular because if you're looking at any majors, versus the AUD, or if you're looking at any crosses, you'll be able to see that Aussie has been actually doing exceptionally well, starting with versus the US dollar. But in particular, I've actually taken Japanese yen purely on the basis that this pair is attracting a lot of potential volatility over the coming days and weeks. And given the fact that we're actually seeing a structural move in the market generally, where trend is your friend, and looking at potential commodities in particular, this is a pair where if you're looking for those short-term moves in the market, or if you're a short-term trader, then this could be of an interest for reasons more than one. And we can actually see that Aussie is in rebounded or regained some of those lost ground over the last couple of sessions against the yen on the back of that CPI front yesterday. But we also do understand that obviously Bank of Japan is looking at to do potentially intervention once again, and whilst the inflation is actually somewhat picking up in Japan, in particular when actually looking at the wages, there is the snap election that's coming on 8th of February, and we could potentially expect Bank of Japan to start looking at raising rates again at some point in the future. Now, that would obviously add a level of volatility into the market, and we're also seeing a large number of those unwinding carry trade positions that are happening in the market globally as well. So if you're looking for a pair that could provide a bit of volatility, this is the one to look at, especially as we're actually entering the resistance level around 105 level, which could provide perhaps a double top as well at the market, and provide a bit of sell-off in the short term. But overall, quite a volatile pair, something to look forward to if you're looking for a short-term intraday trades.
All right, Zoran, what about gold? Just pushed through 5,500 for the first time.
It's incredible, isn't it? Like, and just the move that's happened so erratically and so quickly. And if you have a look at that parabolic move over the past few days, we can actually see the gold is just, we don't know whether it's a momentum trade or whether it's a pure speculation at the market top right now. And this goes to all commodities that we're looking at, whether it's silver, whether it's copper, and all the rest of it. Gold is doing exceptionally well right now. That's all that matters right now. And whilst that parabolic move is actually taking another leg up, it's hard to think that it will continue at this pace for much longer, because RSI is clearly indicating an overbought territory. But again, Julia, if you have a look at the fundamental and thematical themes that are happening across the globe with all the geopolitical risks, if you have a look at all the central bank buying, if you have a look at the Fed and the commentary from last night's Fed interest rate decision, where market is pricing another 2 interest rate cuts. Trump is clearly indicating to the market that US dollar is actually likely to continue heading lower over the coming months. Then it's really, really hard to imagine gold in the long term coming off much more. In fact, it can probably come back to reconcile or maybe touch the support level around 5,000. But over the long term, I think it's a no-brainer that it's probably likely to continue heading high, and we are likely to see more upside in gold, silver, and the rest of the commodities, as well as we are in a super bullish cycle right now.
Absolutely, the super commodity cycle. All right, Zoran, thanks so much for your time in those charts. Zoran Kresovic there from Blueberry Markets. Well, that does it for this edition of The Trade. Be sure to join us next time.